Hello, everyone. My name is Joe DeBrita. I'm an investment associate with the JMRD-Watson Wealth Management team. And today, along with my partner, Adam Watson, we are here to talk about ESG. In recent years, many of our clients have asked us about how we incorporate ESG when making investment decisions. And what we hope to do today is answer some of those questions. So with that, I'd like to introduce two of the people that are on the call here with us today from National Bank Investments. Anna Maria Testani, Senior VP and National Sales at NBI, and Gavin Shipcoulter. He's our Regional Director for Southwestern Ontario at National Bank Investments. So thank you, both of you, for taking the time to be here with us today.
Well, thank you for having us.
Thank you very much for having us, Joe and Adam.
Yeah, for sure. And so with that, Gavin, maybe I'll just pass it over to you quickly to tell us a little bit about National Bank Investments, or NBI as we call it here.
Absolutely, Joe. So at National Bank Investments, we are actually the leading retail open architecture provider in Canada, and we're dedicated to providing diverse investment solutions to meet the needs of our evolving clients. We strive to be the best option and build the best solutions for our clients as a reputable top-tier asset manager. National Bank Investments is portfolio manager agnostic, and we offer endless opportunities as a key partner promoting innovation and excellence for our clients.
Perfect, awesome. So Anna Maria, I think let's get right to it. I know you've spent a lot of time on this topic. Yeah, Adam, I think you had the first question.
Thanks, Joe. So let's start really simply for question number one, and for those at home, what is ESG?
You know what? It's funny. It's the simplest question, but it's probably one of the more complicated ones. First of all, you have to start with the acronym ESG, right? So E is for environmental. What they're looking for is definitions like reduction in greenhouse gas emissions, waste, biodiversity. The S stands for social. So, and we've seen a lot of that in the media, which is, they want to see robust diversity and inclusion policies. At the end of the day, what they're looking for is they want to see our firms avoiding discriminations, right? The cliques, the clubs, the ceilings. They want to see community relations, your labor standards, human rights. The last one is what's called governance. So again, that's, like fair executive compensation. You're going to say, what does that mean? Well, they want to make sure that everyone in the firm is equally sharing in the wealth of the firm, as opposed to just one individual versus everybody else. They're looking for corporate, what's called transparency, shareholder rights, business ethics. It's not profit at all costs, right? And lately you've heard of probably a lot of this is like women in leadership. The thing that's interesting about ESG though is today, when you're hearing ESG, most people kind of sort of stop at the sustainability of the environment. They're thinking green. But I actually think with more and more education and with podcasts like yourselves, people are going to realize that social and governance are things that are just as important as what we're doing with the ecosystem. I don't know if that gives you kind of sort of an idea of the ESG, but it really is an amalgamation of three topics that it's not that they're new topics. They're now becoming as important, equal to the balance sheet. So it's not the balance sheet without these things. No, now people want a strong balance sheet, but you also have to be strong in ESG.
Yeah, I think that's a perfect explanation. So maybe we could talk a little bit about the kind of another part of it. So we hear about ESG and we hear about responsible investing. Do you want to explain maybe the difference between the two?
Again, that's a very good question. So I'll give you an example. When we say responsible investing, RI, what that really is it's an investment approach that you take into account ESG, so environment, social, and governance practices. So what you're doing is you're taking a traditional financial analysis, right, when you're looking at selecting your portfolio, and then you apply an extra layer, which is called ESG. That's what's called responsible investing. Now, you're probably going to say to me, well, why would you want to do responsible investing, now? Well, what you're trying to do, and when we're seeing this more and more, is you want to have a better evaluation of what's called business risk. So give an example, reputational risk. If some of the labor standards that a firm uses is not optimal or not being fair to the people in that country, that can have a significant impact on the firm. So that's a business risk that in the olden days, we used to kind of sort of like not bring as much importance because we're like, oh, who cares what happens to a continent away? Well, today it could bring you down. Another reason why you want responsible investing is because a lot of clients want to know about, they want to identify the companies that are engaging in what's called sustainable activities. They're not just looking for the short-term profit of the moment, and then you're pushing off the long-term consequences that you're imparting on the world. They want to know, are what you're doing, is it sustainable? Is it helping the ecosystem? And again, it's not one or the other, but what responsible investing does is it takes your traditional financial analysis and you complement it. The best way I usually tend to say to people is think of a pyramid. Right, you have your base, which is what's called your financial motivation, right? You're looking at, what we currently do today. But the tip of your kind of sort of pyramid is you're looking for human welfare. So you might notice there's a lot of touch points between financial motivation and human welfare. It's not one or the other. So responsible investing kind of sort of pushes you to do the multiple layers and figure out what are the right factors so that, it has a material impact to your performance. And with the latest crisis since COVID kind of sort of hit us, we're starting to notice that companies that are led by people that are very conscious about their ESG footprint are actually performing much better in this ecosystem. Why? They probably mitigated their risks a little better than others. Does that explain the difference between ESG and SRI?
Yeah, that was great.
Perfect.
So my next question is, I know NBI and maybe National Bank is signatory to the United Nations Principles for Responsible Investing, but I'm not entirely sure what it means. So what does it mean, and why did we sign?
It's a good point, right? So yeah, you're absolutely right. So NBI is a signatory of what's called the United Nations Supported Principles of Responsible Investing, and for everyone on the call, it's called basically PRI, right? And what PRI is it's a world-leading proponent for responsible investments that supports like a whole international network of signatories. In integrating, of course, environmental, social, and governance factors in the investment analysis, in the decision-making practice. So when you're signing as a PRI, that is what you're stating to everybody. And it's a very, very diligent process. It's not something that you can just say, oh, sure, you know what, I do that. It's like those people that say I work out, but they never go to the gym. No, a PRI is something that you are signing for this. It is embedded into your, let's say, your methodology. So if you look at NBI, we have a proprietary portfolio manager research, where we monitor, we have a methodology to it. We have a governance process. And our process oversees a bunch of criteria, from the organization, the people, the pricing process. Well, we've added the ESG factors to it, because we actually think if you add the ESG factors in conjunction with the traditional financial analysis that we were accustomed to doing, personally, NBI thinks it's going to allow us to have a better assessment of risks and opportunities. Let's not forget the opportunity part, which we think it leads to much better investment decisions. And it does make us kind of sort of a more integral part to what clients are looking for. One of the things I often say to people as well is when you become a signatory, it reinforces NBI's commitment to design managed solutions. We're going beyond just what our table stakes of portfolio management. We're looking to provide a kind of sort of like a superior risk-adjusted returns over the long term, not just the short term. Because remember, we live unfortunately in a financial market where quarter per quarter, we're almost accustomed to look at that 3 months. ESG kind of sort of takes your focus away from that 3-month kind of sort of importance and asks yourself, are you consistently able to do this well? Where are your opportunities going forward? So again, PRI is something that's important For us, we're one of the leading banks affiliated asset managers in Canada that actually started this. So, we're very proud of it. And I would probably say we're at the tip of pretty much where we're going. We have more to do, and we will. But remember, it's something that we're learning as we go along, because it is a relatively novel topic, and it's garnered a lot more kind of sort of interest in the media. It's garnered a lot more interest in clients. If you're looking today at a lot of consultants, this becomes your first, it's your first base to opening a conversation. If you don't have it, actually for many, won't even engage a conversation with you. So that's why we're at an inflection point where if you're a PRI signatory, that is, you're sending a message to people that you went through a very diligent process, you are recognized, and you are following the strict mandates of what it is to look at ESG factors. That's the message you're sending, but you have to keep up at it.
Thanks for that explanation. I'll say you got my wheels turning there when you compared quarter to quarter, maybe as the traditional fundamental versus ESG. Lots of those factors take longer time than maybe we focus on in a traditional market experience or sure, when analyzing a company. So that'll lead me to my next question. So what are the biggest trends presently in ESG? And I'll say we kind of showed what it is now, but where's it going?
Yeah, so is ESG new? I think you're right, Adam. It's not new, but it's definitely become way more appealing to the mainstream investor. And it's no longer what I would call a niche market. Like if 10 years ago you would have asked me, I would have said there would have been some niche players that wanted to do ESG. Now it's becoming mainstream. And in fact, many consider it to be probably one of the most important factors in the evolution of our financial industry. Like we haven't had anything really substantially shock the market for the long term as this. Now, you got to look at the fact that, growing climate crisis, what we've seen happening in Australia, what's happening in the US, what's happening across the world, right? The interest in corporate policy, reputation of a firm. These are things that are becoming uberly important to clients. And by clients, I'll go from retail all the way up to institutional. And what I think also has been really important about the trend, there was this myth that, people wanted ESG at the lowest possible cost. What studies have actually shown now is that investors are willing to buy at a higher price point in exchange for sustainable practices. Like Adam, that's like, we've never seen that. Why? Well, because people are now saying we're applying a morality to our value system to what we're willing to pay for. And that, I think, in my opinion, is where ESG went from a fad to a table stakes. You definitely want to, if you want to look at what is making it as far as a trend, like I said to you, the main factors, sustainability is for sure. But there's also what I would call our Gen Z, our millennial clients. When you're talking to them, a lot of times they'll say it's not profit at all cost. They'll be the first to say, I'm willing to live with a little less, but provided that my footprint is good. So all of a sudden, you're not having to convince a client to do the right thing. The client now is I could just see a client tell you and Joe, well, no, I require for you to do the right thing. I would love to see ESG now become extremely embedded in the table stakes. So I'll give you an example. If in the olden days, we would have looked at someone's financial balance sheet. And we're accustomed today, when we look at a company that has like a ton of debt and they don't have the ability to repay, you and I would look at each other and go, there's no way this company would ever fall through our system because it's not viable. I think the way we're trending, that same analogy where it becomes a hardcore, like a no, is the same thing when you're going to evaluate companies. Not only are you going to look at the balance sheet, however, if this firm fails at one or all the elements of ESG factors, guess what? They default, they won't be in the portfolio. And I think that's where the trend is bringing us. And what's interesting as well is ESG, all these changes They're not being reinforced by legislations, right? Because we've had environmental protection laws for a while. But it's just more of the fact that we now are understanding the reputational and financial impact to not applying morality to our problems. And people are starting to understand that. A lot of people are going, had we done things differently 20 years ago, maybe some of the problems we have today, we wouldn't have them as severe as we have. So it's that understanding, right? It's that investor behavior. They're noticing these things and they're starting to talk about it, and they're not going away because we have been talking about ESG for the last 10 years. It's only garnered more importance. So I think the trend is not a trend. I think it's just the table stakes.
Yeah, that's fantastic. And I'd have to say, as one of the resident millennials here at JMRD-Watson, everything you're saying is completely resonating with me, and I speak to a lot of our younger clients, and these are the sort of things that I hear on a daily basis. So I'm really glad you've explained things as you have. But with anything, there's always challenges when you're trying to build portfolios with an ESG overlay or in the landscape of looking at ESG. Is there anything that you've come across that you'd like to discuss in that topic?
Are you referring more towards in the essence of like what could be the challenges facing with ESG?
Yeah, that, and we've seen that different sort of different analysis will look at companies in a different way. So it's not really like a one size fits all kind of overlay yet.
I would probably say to you, there's actually three elements that I would say that ESG still has to iron out in order to be better cemented in the industry. So one of them you just mentioned yourself. It's called education. I got to tell you, when I started on this course about 3 years ago, I got confused with all the words. So if you look at investors today, they need to learn the language. Like, what is sustainable investing? I'll give an example. If you say to someone sustainable investing, they may think it's ethical investing. They're not the same thing. We use personal principles as a filter, but it doesn't necessarily mean that's the business filter of it. So there's a lot of ambiguity as from an investor's perspective. They don't necessarily master the terminology. And what that does is they may inadvertently do things thinking they're doing good, Joe, but at the end of the day, it's not the good that they thought they were doing. So education for sure is a pitfall. I think it's a huge one. The other one is as well is advisor knowledge. And of course, present company is you're actually one of the few that I've seen actively work at educating people, and also you're mastering yourself the knowledge. Many advisors aren't as confident in their ESG kind of sort of definitions and language and usages as you are. But again, what we know, with investors becoming more aware and they're increasingly concerned about, sustainability, social, environmental, if you don't have a language that matches theirs, or if you're less knowledgeable than your clients, I think, you would be at a significant disadvantage. So you need to, you're ready today to have those engaging conversations. For me, that's a value, that's a plus, that's a worthy price to pay, because I don't have to look at you and go, how come you're not there already? Clients are going to want to gravitate to advisors that have that same value system already embedded in their practices like you. So if you look at education for investors, that's one problem area. I think advisor knowledge, you're definitely representing exactly what should get done. I think the other part has nothing to do with your clients or yourselves. I think we need to work a little bit better in the industry as far as what's called better reporting and common standards of terminology and measurement. Now, you and I know, if you look at accounting standards, we've come a long way, both not just in Canada, but in the US, but globally. There are many standards, international standards, that kind of harmonize this. I'm not sure we're there yet, right? So when you're looking at sustainability reporting, is it consistent? Today, a lot of portfolio managers have to invest a significant amount of time to really identify where the opportunity. That's why I kind of sort of like the active management part of ESG. That's why at MBI we kind of went more that way, because there is definitely a value added in digging a bit deeper, because there's no harmonization in the world as of yet, right? So ESG is hot, there's an interest for it, but we still have to be careful, right? And I think there's 3 prongs where we could go wrong. You know, and that's something that I would say to you, always go in with eyes wide open.
Yeah, no, that makes a lot of sense. I just think it's so great though that we are at a point in history where this is, you know, taking a forefront to the investing world and really holding companies accountable. So, you know, any of the challenges that are out there, I think they're going to be worked on by some great people going forward.
And I'll just add, the team has our pillars that we follow, and one of them's lifelong learning. But we've taken a little more working from home and working from 18 locations to add a little bit. We may have to add a letter to pillar to fit in an E for educating.
Yeah, absolutely, right. But it's to your advantage. I would say to you again, it's an opportunity. You know, ESG is just not about managing risk. There's an opportunity in it. And again, he or she that takes advantage of that, good on them.
Yeah, definitely. And so I think with that, you know, National Bank Investments has released some ETFs that you know, track everything that we've been talking about. The question is though, why now? Why did we do this now?
You know, I think there's just a couple of things, right? So the why now is always something that I always say, well, hindsight's beautiful, right? If I could have launched it 10 years ago, but I think every firm has to grow and evolve at its own pace. I think for MBI, we have attained a certain level of maturity and seniority on our investment platforms that it allowed us easily to go into ETFs. And even at that, we've been monitoring ETFs and ESG as far as that is concerned. And we've been asking ourselves, where's our unique selling proposition, right? Like, do we just want to be an index that just follows an index at large with no real kind of sort of work to be applied to it? Or like I mentioned to you before, the better reporting creates itself an opportunity. So we actually launched the sustainable ETFs as, in my opinion, it's our commitment that we made to the UN nations as a signatory for, you know, for principles for responsible investing and principle for responsible banking, that we had to do that. We have no choice. If you sign, you have to also create the products that support that. You know, I think additionally as well for MBI, it supports and it aligns ourselves with our ongoing efforts that we're currently doing today regarding responsible investing. We're not just being happy with portfolio management methodologies. We're adding to it. We're not detracting. All we're just saying is we're going to put more work on ourselves, which is actually it's OP4 plus. It's a little plus sign. And it's our way of making a positive impact, right? Like National Bank is always looking to adapt itself to the market. You know, it's always looking to evolve constantly on our clients' needs, our employees, by the way, our partners, our community. This is our way to kind of sort of say, okay, we believe in this. We are now changing the way we operate, which is how we sign. We're now going to launch products to which our process will filter through investment stuff. And we want to promote and support companies that follow this thought process. So again, it's one of those, it's like chicken and the egg. Would I have launched it 10 years ago? Sure. But I'm not necessarily sure we would have been ready in understanding. I think we now understand better our responsibility. I think clients understand much, much better today what they're really looking for. We don't want to launch a product just for the sake of marketing. That's not that MBI's value system is. We have a proprietary approach to due diligence. We fundamentally believe in the financial analysis. So we wanted to do something with ESG and ETFs that made sense. Not that we were doing for marketing. Like marketing is great, but it's not sustainable, right? You don't do something for the first quarter. You want to do something that grows over time. So again, why now? I would say why not? I think the market is just ripe for it.
So my last question, we've kind of touched on it a few times in the conversation, so I may tweak it, but it was about the future of ESG, and whether that's in general or for NBI. I'll ask the question and for any other comments you want to add.
You know, for me, the future's bright. because we don't know any differently. I do think though, the sensitivity to the way people listen, to the way people ask for stuff, to the way people hold firms and people accountable is just going to grow. And we're seeing it across the world, right? We're seeing a lot of upheavals. People want fairness, want equality, want transparency. The future is bright for the leaderships that can deliver that. And to your point, I think, Joe, it was yourself that you were mentioning millennials. I think millennials have shown us a great ability to voice what's important. They're a great complement to the Gen Ys and Gen X, right? Like they're not different, they complement. They're showing us it's okay to stand up for things that you believe in, and it's okay to sometimes not get paid right away for it. Like there's a price to change. Supply is going to come from more people joining the bandwagon, but no differently than anything else. There has to be a governance. There has to be a due diligence. Just like when someone would say sugar-free. Remember the 80s? We used to have sugar-free stuff. So because we got rid of the sugar. Well, we have to understand, education means you got to dig a little deeper. What did you get rid of the sugar of, and what did you replace it with? The same applies to ESG. Just because someone says they think they are ESG doesn't mean they are. Dig deeper. What does it mean to you, and what are the value systems that you want to go? And choose your firms wisely. This is one of those where steady Eddie is a good thing. A company that's growing, that's doing trial and error, and is adapting to that two-way communication with its clients is someone that, will probably reflect more your investment principles. Because again, at the same token, they're hearing you. I don't want to launch ESG products that are just what I think is right. I think, MBI has always stood for what are the client needs. Our job is to make sure that we're listening to you, we prioritize what you're telling us, and that we cater to as many audiences as we can. The funny thing with ESG is it seems to be in all the audiences' thought process. So it makes it easier to continue developing. We've launched a couple of ESG products. It will not be the last time we come to market, for sure, guaranteed for sure.
No, that's excellent. I just want to thank you, Anna Maria and Gavin, for being on the call today. That you've given us a lot to think about, and I think as this style of investing evolves, we'd love to have you back on the call again and talk about how things have changed and the direction that we're headed. So again, thank you so much for joining us today.
Much appreciated. Till next time.
Thanks for having us.
Yeah, and with that, for anyone listening in, if you do have any questions about today's topic or anything you'd like Adam and I to discuss on future calls, just please reach out to us, and we'd be more than happy to discuss it with you. Thanks so much, and have a great day.